Hello, and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Global markets faced headwinds last week, with U.S. equities falling on inflation concerns, surging bond yields, and mixed economic data. Europe outperformed, driven by optimism over potential rate cuts and resilient economic indicators, while Asia grappled with deflationary pressures and monetary policy uncertainty. Here's a breakdown of the week's highlights. The S&P 500 shed 1.94%, while the Nasdaq Composite fell 2.34%, marking its sharpest weekly drop since mid-November. The Russell 2000 dipped into correction territory, with small-cap stocks underperforming their large-cap counterparts. Value stocks fared better than growth stocks, as reflected in the Russell 1000 indexes. Hawkish Federal Reserve minutes underscored concerns about upside risks to inflation, suggesting rates could stay higher for longer. The December jobs report showed 256,000 new jobs, well above expectations, with wages growing 3.9% year-on-year, keeping pressure on the Fed to moderate rate cuts. Treasury yields spiked, with the 10-year note yield closing at 4.78%. its highest level in over a year. The jump followed Friday's jobs data, reinforcing expectations for limited Fed rate cuts in 2025. European stocks advanced, with the Stoxx Ex Europe 600 gaining 0.65%. Italy's FTSE MIB led the way with a gain of 2.82%. Followed by France's CAC 40, which rose 2.04%, and Germany's DAX, which increased 1.55%. The UK's FTSE 100 edged up 0.30%. Eurozone inflation ticked up to 2.4% in December, driven by energy and services prices, but the ECB maintained its dovish stance, emphasizing that inflation is on track to hit its 2% target. UK gilt yields surged to multi-decade highs as concerns over fiscal policies and borrowing weighed on sentiment. The 10-year gilt yield hit 4.8%, the highest since 2008. Japanese markets edged lower last week, with the Nikkei 225 slipping 0.30% and the broader Topix index down 2.50%. The yen weakened to 158.05 per USD, driven by the widening US-Japan yield differential and speculation over the Bank of Japan's BOJ tightening trajectory. The yield on the 10-year Japanese government bond, JGB, rose to 1.19%, the highest since 2011, tracking U.S. Treasury yields higher. Governor Kazuo Ueda maintained a tightening bias, stating that rate hikes remain contingent on improving economic and wage conditions. However, speculation is growing that the BOJ could delay its next rate hike to March or April. Inflation-adjusted wage growth fell 0.3% year-over-year in November, marking the fourth consecutive month of negative real wage growth and a potential headwind for consumer spending. Chinese equities declined as economic data highlighted ongoing deflationary pressures. The Shanghai Composite lost 1.34%, while the Hang Seng Index fell 3.52%. December's Consumer Price Index, CPI, rose just 0.1% year-over-year, while the Producer Price Index, PPI, contracted 2.3%, marking the 27th consecutive month of factory gate price deflation. Core inflation, excluding volatile food and energy costs, ticked up slightly to 0.4%. The People's Bank of China, PBOC, reiterated its commitment to a moderately loose monetary policy. It plans to support key sectors like technology, pensions, and digital industries by reducing the reserve requirement ratio and interest rates as needed. The Caixin S&P Global Services Activity Index rose to 52.2, its highest level since May, signaling some stabilization in non-manufacturing activity. December CPI data will be released on Wednesday, January 15. Markets expect headline inflation to rise 2.9% year-over-year, with the core CPI increasing 3.3%. Retail sales figures for December are due on Thursday, January 16th, with forecasts suggesting a 0.6% month-over-month increase. The European Central Bank will publish minutes from its December policy meeting on Thursday, January 16th, shedding light on its inflation outlook and potential rate moves. November data for Eurozone. Industrial production will be released on Wednesday, January 15th, offering insights into the region's manufacturing health. December's Consumer Price Index, CPI, figures are scheduled for release on Wednesday, January 15th. Analysts anticipate inflation to remain steady at 2.6%, with core inflation slightly decreasing to 3.4%. Deputy Governor for Financial Stability, Sarah Breeden, is set to deliver a keynote speech at the Financial Stability Law Forum in Zurich on Tuesday, January 14th, discussing financial stability and systemic risks. Business sentiment among large manufacturers will be released on Thursday, January 16th, providing an update on economic confidence. China's economic growth for the fourth quarter will be reported on Friday, January 17th, offering key insights into how deflation and stimulus measures have impacted growth. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.